Maybe the last 10 seconds. We're live.
We're good.
Yeah.
All right. Hi. Welcome on a Saturday evening afternoonish right now. It's a fairly cozy crowd here, so I'd like to give you all a very warm welcome. This is our very first fintech industry-based meetup that we are trying to do, and the idea behind it is to just to get the community together. All the enthusiasts of fintech and in and around the space uh, to give them a safe space here where we can talk about things, talk about everything in and around fintech, the advancements and what's new, what's old, what should change, what's the problem. And more importantly, just have this set of experts here with us and just learn from each other basically. So a very warm welcome to all of you in attendance, and also a very warm welcome to everybody who's joining online. Again, this is another edition of our hybrid meetups that we've been doing very recently because we understand that not everybody can join us in person. But obviously, I can assure you that there's going to be a lot of learning today. We have an excellent set of speakers who are experts in their respective fields. One of them is here with us in person, and two of them will be joining online through the hybrid setup, and you will be listening to them talk. Uh, so yeah, I hope you guys have a great enjoyable experience here, but obviously you must be wondering what we are doing here and what to expect out of this particular event. But today that's not my job to tell you, because I have somebody very special who is going to come and help you with that. So allow me to introduce you guys to uh, a very important part of the partners and growth team, and a very dear friend of mine, Martin James. A big round of applause for him, please. Stage is yours.
Thank you, Digvijay, for setting up the stage for me. Actually, I'm wanted to start with some quick information. Like, how do we most of us start the days? We wake up when the market opens. We go to our Siri or Alexa. Alexa, what is actually the stock price of the company which you have invested? So Alexa says something to you, and you compare it with the other day. But can we compare this with the previous days? How we had actually with our days of our fathers and grandparents who have been looking about the newspapers and following the stockbrokers. It was a drastic change, right? I really wanted to talk about this glad topic fintech, which is coming up with a great speed in this 2020, and it is actually moving ahead in future days too. So, as I said, I'm Martin. I'm from GeekyAnts. So, we while really love to start like why GeekyAnts is actually doing it and how fintech's actually changing its pace in 2022. We have a very big innovations has been coming up with so much of industry, various industries. Like comparatively, social media companies, I would take it as an example, like Facebook, WeChat. So, why do these companies try to come into fintech? It's like, why is that a payment transfers has been happening here? Have you experienced like there's recently like companies via WhatsApp, they come up and they say that you transfer the money, you get 100 percentage or 100 rupees of cash back, 10 percentage of cash back. A lot of offers has been provided from Zomato. So is that a concentration for most of the industries to concentrate in fintech at the moment? Yes, it is. Fintech is growing great. It is on the lightning speed. So here we are going to talk about this lightning speed of the fintech in 2022 and how technology helps to be in a better shape, like AI and ML, some robotics, as I have said before. The Siri or Alexa, they give a better comparison to a big data. They give us a big data to analyze. We are easy to make decisions, right? So this kind of information is going to be float up here, and the community is built to listen and learn and identify most of the ideas which has been coming up from the fintech. Explore fintech with the community. So we got our experts here to come up with more informations. We got a stage to learn this, created this space for learning, and you having an opportunity to expand your networks here like virtually, and also with the crowd who has come here, you can share your ideas, your can thoughts, your perspectives over here. And I would really love to tell you like why is GeekyAnts is so interested in fintech, right? GeekyAnts has actually worked with more than 15 projects in fintech, and we are upcoming working as well. So I meant like working is not just a technological solutions. All we know is GeekyAnts is a technology company. We work on technology, different tech stacks. But out of that, we don't stop with technology. We love to give an exact solution on based on their industries. If particularly for a fintech company, we don't work on the technologies only, but also we work on the R&D of it. We got our business analyst over here who will be deep diving into an R&D and fetching a lot of informations. For example, like they provide the business insights, technological implementation, and we highly concentrate that these technological implementations will help them to reduce the gap, will offer a good convenience for the users who is working. Like we find that the banks have been completely open now in mobile. Take your mobile, open your mobile, click it, tap it once, your bank account is open, tap it again, and you got your stock market listed. You will be able to identify what is all the stocks. You don't stop there. You get to get educated about those stocks as well, like what is the price today, what is price tomorrow, not only on banking, on other sides of cryptocurrencies and everything together. So this meetup by GeekyAnts, we have experienced a lot. So we are doing it first time on fintech, but though we have worked a lot of meetups before on tech stacks like React, Angular, React Native, Flutter API integrations also. So now I'm setting up the stage. Like the next 2 hours or the upcoming time gonna be like this. You'll be having our experts here who are gonna talk about the fintech. Nikhil Joseph, Ashwin Narkhede, and Jignen Pandya. So these are the speakers. And post the speakers, the session is open for panel discussion. You will be happy to interact with the panel, get more ideas about it. During this meetup, I really love to inform you to follow the code of conduct. So we wanted your comments to be light and healthy, to be respectful each other, so that which is very easy and feasible for us to convey our thoughts and perspectives. Feel free to understand each other or interact each other. This setup is we have been created. Why? Because we all wanted to discuss each other. Our thoughts, our perceptions should be transferred with one among other so that we get a bigger idea, bigger detail about the fintech and more out of the fintech also on technological wise. So you'll be having an option when the panel discussion is open. You'll be able to shoot your queries, your doubts, or whatever. Until then, we would really appreciate if you could attend, concentrate on the speakers, and post which once the panel discussion is open, kindly shoot your doubts or queries. And last, actually, what I would love to say is please turn off your phones and you are getting a happy time to know more about the fintech, get more ideas and strategies about fintech. Thank you. So that is all from my end. I'm Martin here again. Thank you, Digvijay, for opening up the stage for me. Over to you.
Thank you, Martin, for letting everybody know what they can expect out of this event. And obviously, just to reiterate very quickly, the code of conduct is really important to us. So do remember to silence your phones during the talks for minimum to no interruptions. And so everybody can have a very enjoyable experience as well. Uh, Plus, additionally, of course, you guys use Twitter and LinkedIn and all that. So if you guys like what's going on here, do help us spread the word. Do tweet about us, post about us, get pictures, and let everybody know what we are doing here at Kiki. And so through you guys, we can also expand this community and perhaps have more people join us the next time we do this. Great. So let's get on with the show. I think it's time for me to happily introduce the first speaker of the day. We have with us Nikhil, who is a lead analyst at Multiple. Multiple is one of the most, has been termed as one of the most disruptive startups in India today and is working tirelessly to make saving and investments fun for everybody. But I'll let Nikhil tell you more about it. Nikhil, a big round of applause for him, please. Yeah, you're good. Nikhil, over to you.
Thanks a lot, Digvijay, and thanks everybody who's here. It's my pleasure to interact with all of you in today. And today we'll talk about a very unique concept that we, as Multiple, as a company, are introducing to the market, as well as it's been very intuitive to us as Indians. We are heavy savers. We've always seen our parents saved for our spends, we've saved for our heavy purchases, investments, houses. But here we are trying to link it to something deeper and give a little bit more of meaning to it. So I'll just walk you through how we look at it, and I hope that you will also be able to appreciate the same. So, when we talk about finance, right, personal finance, there are various elements to personal finance where income is something that we are all earning and taxes are something we all have to pay. But beyond that, post our insurance needs are taken care of, there are a few things that we can keep in our hands and use them to optimize the journey of throughout our life. So, the most important aspect that I would want to talk to you here about is the savings and expenses aspect, where we are trying to indulge it with investments. So, what is it that is missing here? Probably is the planning aspect. A lot of us are making investments on our own, but is it the most optimized or not? Is something that we have to think through. And many times we may not have the resources or the time to do it. But here we are trying to say that whatever you try to save for and you finally use it for consumption, right? You either, even if you're purchasing a house or a car, the investment is finally used for consumption. So here we are trying to link your saving with your investment to make it into a consumption. So this is traditionally how we have looked at, or the society has looked at savings, right? So whatever we earn, there are some expenses we have, and whatever is left is generally put into the savings. But here we are trying to tell you, or we are trying to recommend that there's a different way that we should look at it. We are trying to talk about goals. If you have some goals in the future, whichever you want to purchase for whatever you want to spend, and it could be something like even a retirement, which may be a long way down the line, but you need to plan for it. And if you start saving for it today, and if your needs are taken care of, so whatever is left after that saving, where you take care of your future goals, should be used for expenses. So that way it has a dual benefit. One is not just that you are saving and ensuring that your future goals are met as per the timelines, but also the current expenses that you do, the consumption that you do, can be guilt free. You don't have to bother about that. You're compromising on your future while enjoying the present. So this is something that we thought makes a lot of sense intuitively, and more of us should try to follow it. So now, if I tell you that, can you save something like a 50,000 more additionally just by planning? And I'm talking additionally. I'm not saying that 50,000 extra, that 50,000 discount you're getting, but I'm talking about, can you do something that where you can save this additionally, right? So let's see how that can be done. But before that, when we talk about lifestyle goals, all of us will have our personal goals. So some of you may want to travel, some of you will have goals to purchase some assets, some of you will want to purchase, pay for retirement, for your kids' fees, for higher education and such. But these are all very unique to us. Some of us will have different needs than the other of us. Now, if you look at the traditional ways how people save, right? One is the bank account savings, which are very common, and many times, since it requires the least amount of effort, our funds keep lying there in the bank accounts. Once we get a salary, we may be having some buffer, and it just keeps lying there. It may not be invested in a more efficient way. Then we talk about FDs, which are very common in India. If you see in the banking system, the highest percentage of funds are parked in FDs. Now, there is a reason behind it, because it is a very considered a very safe instrument, because it's backed by banks which are regulated by RBI. Plus, there's an insurance around it. But the truth of the matter is that you're losing your purchasing power when you invest into FDs. Today, the inflation, the last few months average has been around 7%. Now, if you look at that versus a FD rate, which you are getting something around a 5.5%, you're losing your purchasing power every year by 1.5%. So does it make a lot of sense? Beyond a certain percentage of your income, it should not be parked into inefficient instruments. Then there is the other end of the spectrum, where we may be dipping into some risky investments, like something like an unproven asset class, like a cryptocurrency, or something which is beyond our risk appetite. So that is again, going beyond our risk appetite is something which is not advisable. And when we talk about spending, right? So today, credit on demand has become so common that one is that even if you want to plan and save for some spend, what we do is that we save it in the savings account, or we use our current cash flow. Like, you want to buy a mobile phone, you will use your current cash flow or 2 months of cash flow and purchase that. And the third way is obviously of taking credit, which is like a BNPL or personal loan. where again you have to pay some interest on it, and you're borrowing from your future essentially, right? After, even if it's a no cost EMI, after a couple of months of EMI, it will start pinching you, and as it becomes the higher proportion of your disposable income. So these are not the most efficient ways to spend. So then what is it that I'm talking about? So there is another way where we say that you have to save smart and spend smarter. Now, how can this be done? Now, the saving smart aspect is something which is intuitive, but we may not be actively doing. Maybe because it's not available to us readily, maybe because of some other reason, lack of information or lack of resources like time. So the primary thing that you have to do is, one is planning for your goals. Make an approximate goal that maybe in 2 years, 3 years, 5 years, I want to do such. In 15 years, I want this goal to be achieved. Now, when you do that, what is the best way to achieve that goal? What is the instrument that can best help you achieve that goal as per your risk profile? Again, it should be customized for you. What is good for person A will not always be good for person B. Many times we make investments looking at what our colleagues are doing, our friends and family are doing, but it may not be the most efficient way to do it. So, talking just about the saving aspect for now, if I talk about where we can invest, there are four, basic asset classes that we have categorized where you can invest. One is equity, which is something like stocks or equity mutual funds, where we invest. The other is debt, which can be something like government bonds. Even the FDs are a part of debt. And the third are commodities, which require some special expertise and may not be suitable for everybody. And there are other alternatives like real estate and cryptocurrencies, which again needs specific expertise. There is another product called Brand Saver, which I'll introduce in some time and talk about it more. But these are broadly where we can categorize most of our investments into. Now, you may ask which investment is the best, right? Because all of us want to reach the holy grail and say, where do I put my money? Tell me that. So when we say that, right, the answer is that, so this is what you see on the screen right now is the performance of various asset classes over 10 years in the US. And here you can see that none of the asset classes has continuously been the top performer. There are three categories of equity here: the large cap, mid cap, and small cap. There's a generic US equities, debt, real estate, and gold. So gold had done extremely well in 2011 and 18, whereas not so great in 2013 to 15 and also 17. Similarly, if you look at real estate, some years it has done extremely well, some years it has done extremely poor. Of late, it has been performing pretty well. So, but does that mean that what kind of exposure do you have to that asset class? How do you decide that, right? But on an average, if you see from 2012 to 18, the area highlighted in dark, what happens is that equities on an average have performed relatively better. Now, does that mean you put all of your money or even your short-term savings into equities? Probably not. So I'll just address how we can look at it in the best way. Uh, just meaning to spend 1 minute over mutual funds. Why we think that mutual funds can be one of the best instruments, the lowest effort and relatively cost-efficient instrument to invest into your goals, for your goals, and achieve them. So when we think about mutual funds, right, one, mutual fund is not an asset class. The asset classes we talked about, equity and debt, and even gold and other alternatives, mutual fund has the ability to cater to all of these. They have products which where you can invest into these. So many times we think only about equity when we think about mutual funds. Oh, market is going up or market is going down, but that is only the equity market. In fact, the debt market or the debt mutual funds are much larger in size as compared to the overall equity allocation. So four primary categories of mutual funds, which is debt, equity, alternatives, and hybrid. Hybrid is nothing but a mix of debt and equity. Then how do you select, right? How do you select the funds? So this really needs to be based on the valuations. Like we saw, none of the asset classes are continuously the winners. You need to change them as per the relative valuations. And finally, you can think about doing an SIP, because what it helps is helps bring in the discipline. And like we talked about longer term goals, right? You're saving systematically for them over time, and that will really help you stay put throughout the market instead of timing it. What happens is, even in the lower cycle and the higher cycle, your money is going in, and you will eventually derive a healthy IRR if your asset allocation is right. And finally, it is based on personal goals, which we touched upon in the beginning, and it should always be after research. Don't listen to somebody else investing and invest for yourself. It will not be suitable for you. So either invest with your own research or go with an advisor who is working for you. So when we talk about mutual funds, right? There are 1500 plus direct mutual funds. So here comes the dilemma as to how do we select one of these or a few of these which can help us achieve our goals. So again, the same thing that we've been talking about, it should be linked to your goal, personalized to your profile. The profile here I'm talking about is your risk profile and your risk appetite. And finally, it depends on other factors which are external, such as the market valuation, where you need to diversify your capital so that your journey is achieved in a proper manner, as well as rebalance. Rebalancing is, again, like we said, moving from various asset classes, because none of the asset classes are continuously performing in the same way. So this is just something that we at Multiple follow: safety, liquidity, and return. So we prioritize your safety of capital before others and the liquidity of your funds. Finally, we believe that returns will follow. If your asset allocation is correct and you are investing in a disciplined manner, your returns will follow. So we look at returns more of as a byproduct of your proper asset allocation, rather than chasing it and taking higher risk than you are expected to. Now comes the spending part, right? So we looked at how we can save. It depends on your asset allocation. Now spending part. Now if I tell you, one is that if you're planning in advance and you have some savings, right? Suppose you want to buy a car 3 years down the line, and you have some assets built up and some returns earned on it. One benefit you have that is you have some extra money made out of the savings which you had earlier simply because of the planning. Then there are exclusive brand benefits which we'll talk about. And finally, at Multiple, at least, we try to help you earn rewards for the positive savings habit. Most of the applications or most of the industry will try to uh, reward you for spending, but here we are trying to say that build up a positive savings habit, and the incentivization here is to get rewards, because for the delayed gratification, so that you benefit the most out of it. Now, if we talk about something like last minute impulsive purchases, right? Many times we purchase in the heat of the moment. Sometimes, if a new gadget is launched, we try to go ahead and buy that. If someone else is going on a trip, we may feel a FOMO factor and we may try to go for it. But many times, the event exists or the travel exists for maybe a week, but you end up paying EMIs for, say, 6 months or a year. So the regret or the financial stress continues. So here we are trying to say that it's not just the cost that is higher; it is also, to an extent, the cost of your mental bandwidth. And plus, you are borrowing from the future, right? So you're compromising on your future goals. Many products like credit cards and personal loans will charge you very high interest. Now, what if I tell you that you can get better benefits simply by the expression of interest to a brand? Suppose you want to buy a phone and you tell the market that I want to buy an iPhone. Just for this expression, for example, can you get a benefit? So here we are trying to say that at Multiple, we have made it possible to get a benefit or a better benefit for doing this. And finally, saving directly with a brand, which is a very unique concept which we are trying to introduce. So here we talk about two models. One is a market saver model. So what happens is, for example, you want to travel in this year, by the end of this year, right? So what you can do is create a goal for your travel, say 6 months down the line or whenever your travel is. Assume it costs around 3 lakhs, right? Now, for 12 months, you are investing the amount, and the actual amount you finally end up investing is something like 2.75 lakhs. Where does the money go? The money goes into mutual funds, and depending again on your risk profile. And here, when I say mutual funds, again, we have to remember it's not just equity funds, depends on the market valuation. Currently, we believe the market valuations are high. So we are giving debt funds, but we also rebalance it. Suppose it gets cheaper in the future, your funds will be rebalanced. And finally, you can tag a brand. We have a partner list of many brands. So for a travel category, we have 7+ brands. For jewelry, we have different brands. For electronics, we have different brands. And these are regular purchases that we do every year. We are not asking you to go and spend ahead of something which you were not going to purchase. What we are saying is every year we travel, every year we try to buy some gadget or the other. Every couple of years, we may be buying some jewelry or something like that. So we are just trying to partner with those brands and get you the best offer here. Finally, your purchase of the 3 lakh is made using this model, right? So what happens is that you save in advance, earn some return, and earn the better brand benefit. Now, how does this help you? I'll just show you in a minute. The brand saver model is something which is new to the market, which we are introducing. So here, think of something like, if you're decided on a purchase. Suppose you say that one bike, a particular bike, is something that I want, and we have a partnership with them. For example, The bike costs 3 lakh rupees. All right. Now you are saying that for 2 years I'll save for this bike. What happens is you're paying 20,000 only for 24 months, or 20,000 for 12 months, and you will make a 2.4 lakhs. By investing 2.4 lakhs, the brand is willing to give you that product, maybe a bike, maybe a electronic, maybe some other product, at the same cost of 2.4 lakhs. So they are giving that kind of a discount, of a 20% kind of, a 10% kind of discount to you, simply for saving that amount. The amount here is going to the brand. The amount as an advance for purchase. The amount is not going to a mutual fund or savings instrument. It's going to the brand. So what turns out here is that it turns out to be a win-win deal. Why is that? Because brand is getting an advance payment, so it helps in their own financing. You are getting a better deal, and the reason the brand is willing to give that better deal is because they are getting a committed customer, that such and such group of people are interested in the product. And this is a nothing to lose kind of model, because you can cancel it anytime before your last SIP, and your principal will be returned. And there are these are few of the brands that we are in partnership with, and we are working on it. And this is an ever growing list. In another 2 months, probably it will be more than double. We have more than 50 brands. We could display only a few, so but you can see they are in various categories, such as gems and jewelry, travel, electronics, which education, which is our yearly usage kind of items. Finally, the rewards aspect, which I was saying, you get rewarded for simply doing this, because since you are delaying your gratification, what we are trying to reward you for is the positive savings habit. Because we don't want to promote consumption beyond means. What we are saying, that if you are doing this saving, we also want to keep you in the loop by keeping you rewarded, so that you are engaged continuously and also get the benefit of, one is not having debt, and the other is purchasing it the most optimal way. So that is what we mean when we say save smart and spend smarter. So some things, like I said, some things that you would plan on a yearly basis, and how you can get the best return out of them is by saving and investing, tagging a brand, getting a brand benefit, and finally the rewards that we just talked about. And this is the benefit comparison that you see, putting into hard numbers. So something like a market saver, where you tag no brand, nothing. You just, instead of a FD or an RD, which will give you something like a 3% or 4%, you're investing into debt fund. That is why I'm putting a 7% here. Something like a ultra short debt fund, which will give you 7% today. And discount I've taken zero, because you're tagging no brand, simply the market investment. Still, you're getting a benefit of 7% annualized. So the numbers on returns and benefits are annualized, and the number on discount is absolute. So the benefit you are getting here is 7%, which you compare to a 3%, a savings account, is still double. That's a big difference that is coming in. The second option of tag market saver is where you tag a brand and get additional 5% discount. Now, this discount, being an absolute, shoots up your IRR, which is an annualized return. So if you do this on a yearly basis, every year you're saving, say 20% benefit is what you're getting. Every year you're saving this much amount, which you can keep for your future goals or some other goals. And this can become a virtuous loop. Finally, the brand saver model, which I just talked about, the benefit is, condition is that you should be sure what you're willing to buy. The benefit is that you get a better reward than what you would have gotten in the market, and also there's no taxation here, because no income is derived. You're only getting a pure discount. And the final comparison is with your savings bank, which will give you somewhere around 3% today. So this is like a typical example of 3 to 5 goals that you may have in a year, and the total cost will be around 4.5 lakhs, right? So a BNPL will give you a minimum of 4.5 lakhs is what it will cost, and the savings account, probably you'll save some 8,000 by saving some lesser amount, but the IRR that we saw will be around 3%. But by saving on multiple, by combining both the returns, which are more efficient, and the brand benefits, you will get something like the cost will come to something around 4 lakhs, which is a huge benefit every year, right? If you do it on a yearly basis. Finally, just a quick word about multiples. So we offer personalized investment advisory only. We are SEBI registered. All the funds available on the platform are direct and unbiased. We take absolutely zero commission from any mutual fund. We have no interest in promoting any kind of mutual fund over the other. It's purely based on your risk profile and your goal. And finally, the safety aspect, your privacy and security is 100% guaranteed. We don't sell your data or push your data outside the company. It's only for our internal usage. Finally, you get the brand offers and rewards that we talked about. And yeah, so this is where I'll conclude. We call it a multiple movement because we think that it's a movement underway. It's a way that it's a new way of looking at savings. It's a new way of looking at spending, and it's a paradigm shift that we believe. What was always ingrained to us as Indians, our household balance sheets will not be heavily leveraged. Our parents or previous generations have always been saving, but here we are trying to gamify it in a way and provide you a layer of integration on top of it, which is the brand aspect, where you can derive the maximum benefit out of your yearly spends. And the same thing applies for long-term goals also. 5 years later, you want to buy a car, we'll have some partners on cars. 10 years later, you want to buy a house, probably by the time we'll have some partners on housing as well. So it becomes a real virtuous loop, which is why we're calling it a movement. So yeah, that's from my side, and I would welcome you to download the app. And yeah, thanks.
Good. Thanks. Thank you, Nikhil. Thank you for walking us through what multiple is and how we can utilize it for so many different things, not just savings. Buy a car, everybody. We can do that now. Did I see a lot of other people have also walked in during the talk? So again, a huge welcome to all of you. Welcome to our very first fintech-based industry meetup. We already had a talk by Nikhil Joseph, and he was talking about this platform called Multiple, which can help you multiply your wealth while you spend it. So I urge you guys to check it out on your respective app stores. A couple of familiar faces in the crowd as well. Hello to you all. But let's move on with the show. So the next speaker on the cards is Ashwin Narkhede. He is the Deputy Vice President of Customer App and Health Tech Department of Tata AIG General Insurance. I hope we have him here. There he is. Hi, Ashwin.
Hi. Hi, everyone.
Wait a second. We are not able to hear you for some reason.
Can you hear me?
1 second. We just give us a moment while we fix this. Oh, can we hear him now?
Can you hear me?
Yes, we got you, Ashwin.
Awesome.
Hi. Very
Hi.
good afternoon. How are you doing today?
I'm doing good. What about you?
It is great. I know it might be a little weird. There are at least, I don't know, 30, 40 people here who are sitting and watching you, but you can't see them.
Yeah.
So it's okay. Just, and trust that we are all really here and it's not just an empty room and we're not lying to you.
Yeah. Just give me a heads up at any point of time if you don't hear me. Otherwise, it will be very difficult for me to figure out if people are not able to hear me.
That's completely fine. I'll interrupt you.
Yeah.
I'll not stop from interrupting you. Anyway, so guys, Ashwin is obviously the Deputy Vice President of Health Tech and Customer App Department for Tata AIG. He is an entrepreneur, but he is now, likes to call himself a product enthusiast, and he loves building customer-driven products, and has a lot of experience in fintech, insurtech, and e-commerce as well. And today he's going to be talking about something as simple as his topic is, which is the impact of fintech in other businesses. So Ashwin, I will leave you with the crowd that you cannot see, but you trust it's there.
Sure.
And
Yeah.
take it away. All the best.
Cheers. So, I mean, firstly, like Digvijay said, that now since that everyone can buy a car, I think the next best thing for me to say would be, I am here to give you an insurance. So, right. So let's get back to the topic. What I would do is maybe just take you through what I have been doing, what my journey was, and then we'll dive deep into InsurTech. I have done a bit of fintech on asset liability management systems, and then a bit more on mutual funds, bullion golds, and even stocks. Eventually, starting my own startup in insurance, InsurTech, build chatbots and different workflows, AI-driven customer journeys, so that the customer can get a 1 minute, 2-click insurance. We'll talk about that in the coming slides. So, I mean, firstly, when you talk about any kind of tech industry impact, it is important to understand who your customer is, what exactly the customer is expecting to, what are their needs and what are their wants, right? Because it is very difficult to differentiate between, from a customer perspective, it is difficult to differentiate between what exactly a customer wants and what exactly a customer needs. Both things will be very, very drastically different. This is something that I have experienced and learned during my journey. I am basically an electrical engineer who just got thrown into startup ecosystem because of my interests in figuring out how exactly a company works, and eventually going through I would say 4 to 5 years of insurtech journey through my startup, and then eventually working with Tata AIG for almost 2 years now. So in the journey, like where exactly insurance started, right? Initially, everybody was talking about like giving Excel sheets or Excel models to insure. Okay. Initially, I basically when I started looking at insurances, it was basically you an insurance company basically gives your Excel models to the company, to their agents, brokers, and then the broker basically gives you a pricing and gets you the insurance. Today, it is kind of moving towards where you give APIs to the brokers. The brokers also want to give a better experience to the customer, give them uh, like empower the customer to do it yourself, because the expectation of the customers have changed today. Like insurance, which is still not a pull product, it is still a push product where people are pushing insurance to you. Apart from, you can say, car insurance, because it's just mandatory, right? So people still, just to avoid that challan and traffic police, you basically buy insurance, but still it is not perceived that it is that important. If you look at health or life or any other insurances, let's say for even today, gadget insurances are coming in, even pet insurance and other insurances, which are very common in your US and European markets, right? So that is the scenario. So today the customers are quite more interested. Like, how do you define? Like, what do you look at your customer? How do you look at your customers today? Customers are making decisions like whether I want to. From a millennial perspective, you can figure out that people are discussing on asset creation versus experience, right? I mean, people are more interested in getting experience today than asset creation, right? Then there is also another aspect of healthy living, right? So people are more interested in that than personalization, than even convenience, and then renting over buying, right? So these are different characteristics, and which have changed from like the previous generation to the millennials, and then even towards Gen Z, right? So based on this, your innovations basically come into place, and then you can see the impact of these innovations in business. So like in any kind of product sales journey, or let's say a product life cycle journey, when it comes to insurance, it is your pre-sales, then your sales, and then lastly it becomes service, which is post sales, right? So there can be innovations done in all the three segments, and insurance companies and even other startups, insurtechs, which are basically helping insurance companies to build these things, are coming into place and really trying to make a difference here. So without rambling much about this, let me just get back to slides, and maybe we can just take things. Okay. Can you? Okay, I'll move to the next slide. Yeah. So how exactly my insurtech journey started? I was just coming out of my e-commerce business, and at that point of time, just thinking about what to do next. At that point of time, Satya Nadella's conference was there, and I couldn't attend it though, but I was just going through it on YouTube online, similar to this kind of setup. And Satya Nadella basically talked about like pretty much everything today, right? Which is being built, who is building applications, let's say even desktop or mobile apps, or websites, right? Will be building bots as their new interface. That was his comment, and kind of like that really um, kind of like it kind of synced with me. Okay, this is something very interesting. And at that point of time, I was also looking at US markets, where Lemonade was trying to do something interesting in insurance space, and they had a persona. Maybe we can't call it a chatbot, but it was more like you're talking to someone on a website, and it was a persona driven kind of flow. And that kind of clicked, and I kind of me with my co-founders basically thought that, okay, this is something that we want to do and we want to try it out. And this is how RB came into place, right? So we had our own insurance portal where we were web aggregators. We built our own chatbot where we try to source products, convince them with some sort of data analysis, like, okay, let's say what this is your location. In your location, this is the kind of cost that you would bear if you get hospitalized. So this is the basic amount of coverage that you should have in insurance policy. So and so forth, right? So that's how the insurtech journey started. I, who did not know anything about insurance, got into insurance and started loving the product. Initially, I just thought that innovation was the way to go about it. But then once you start getting deeper into the system, you understand there are different sections in an insurance business where innovations can be done, and you really need to figure out where do you want to go and fight that battle, right? So I'll take you through what kind of blocks are there. So like basically, you have different kind of sections. One is distribution. There's a lot of innovation which can be done from a distributor perspective. Then you have customer experience, which is like traditionally most of your insurance was sold through agents, then your brokers. It was majorly offline, right? So customer experience was just someone who was talking to you, right? I mean, the agent used to give you the experience what he can. Now you are lucky, you get a good agent. You are unlucky, you just get a bad agent and you don't click, right? So this kind of the agent might not be able to personify things for you, right? Okay, this is what your requirement. Sometimes he might not be able to understand, or might just tell you about the product rather than understanding you. So you are less in control and the agent is more in control. So finding out a right balance when you are doing a sale, right? The customer should not feel out of control, but also should be in control. I mean, you have to manage that experience in some way or the other. So that is a place where people are working on personalizing the content that is coming on the website. And then even if you have a customer coming back after purchasing other products, you can again personify a different sales product for him, a cross-sell product for him, and give him that kind of experience and feel and make him feel more involved in the whole purchase process, and make him part of your brand community, be it Tata AG, be it anyone, right? And then obviously data is something that has a very big impact today, because you have a lot of customer data coming in, getting that sense out of data, and then giving insights on that data and making use of those insights to either improve your product, improve your experience, improve your processes, even your claim settlements. Those kind of things are very important. So capturing those data and insights is one of the building blocks where there are insurtechs which are coming in, and we need people to think about it in that direction, right? And finally, yes, I mean, new products is definitely there. I mean, because customers are getting more and more digital savvy. Digital customers have different kind of expectations from an insurance company, right? Hello. Hello.
Ashwin, hi.
Can you hear me?
Can you see me here? Can you hear
Yes,
me?
I can hear you.
Yes, perfect. We lost you in between.
Yeah. I think I got a disconnection error, and then
Yeah,
again.
that's okay. That's okay. We've got you back. Please continue.
Yeah.
Yep.
So I was talking about new products. So like your digital customers have a different kind of expectation. Their experience is different. Like, I mean, somebody who is coming on the website and purchasing a product would not really want to do things offline until and unless it is very important. Like, I mean, let's say from a claim settlement perspective, people will not really want to download a form, fill it, and then take it or courier it somewhere. Rather, if you can just make it as simple as buying insurance on your mobile phone, right? So those kind of products where, and again, like coming back to what customer today's customers' behaviors are, right? Like somebody is like renting over owning, or like buying or purchasing. So pay as you drive, pay as you use kind of products, right? I mean, when I'm using, I want to pay for it. Like, I mean, I don't really want to keep paying for it, because also other factor is where customers or users look at is instant gratification. If I'm doing something, I need to get something out of it. Initially we were just forced in, I mean, parents were forcing it. So one of the life insurance or term insurance policy used to come into our bucket, right? Same happened with me. My first policy was life insurance policy with LIC. I'm still sticking with it because my father forced me to do it. But now I'm moving towards term insurance because this is what something I want to go for. So like the new products are definitely something which the younger or the millennials or digital users can relate to, right? So these kind of products will really help. And national health stack is a port of is a I mean part of, let's say, data driven decisions, or even you can call it as a record, right? A record where customers can safely store their health records, and eventually can share their records based on their consent with an insurer or with somebody else, and based on that can get better priced. So kind of like the fifth point is kind of like falls into 3 and 4 partially. Like, I mean, it can help you into just getting better products based on the data that can be shared. There are some open data sets which are being discussed, which will be shared with people. Basically, insights over the data, not the customer specific data, but that insights can help you in understanding what products do we want to tweak, where do we want to tweak, what are the customer demands, or where exactly the claims are coming in. All this information can and start flowing, and we can improve our products. And this can even help, let's say you have an ICICI Lombard policy, right? And let's say you want to port to Reliance, Tata AIG, anyone. At that point of time, if you already have a data set which is there on, let's say, a health stack, right? And a data set, and anybody and other, you give a consent to another insurer that here is my data, you can look into it, and I just want to port with you guys because you are giving me a better service, or I hope that you would give me a better service, right? So based on that, the porting would become easier. So there are a lot of things which are happening in the insurance industry today, which are helping and impacting the existing processes and improving them, right? So let me just jump to distribution and processing. How is distribution and processing changing, right? So embedded insurance. So when you sell insurance, it is very important that you be present at the right place at the right time, right? So this is where embedded insurance comes into play. Like, let's say you must have seen purchased anything on Make My Trip, Go Ibibo, and at that point of time, you'll see a small line with a tick option, buy travel insurance. So this is kind of like an example of embedded insurance. A customer, there is a high chance of a customer buying a travel insurance if you are present at the right place, which is when he's purchasing or planning for the trip. At that point of time, he understands that his flight could get delayed and there could be impact on his travel plans. At that point of time, just the customer tries to weigh pros and cons in terms of, okay, it's 199, it will also cover me for this, and then there's a probability that the customer will purchase your insurance along with his travel plans, or whatever itinerary he is planning, right? So that becomes easier. That's an easy sell, right? Rather than now think about it this way: you are buying your travel tickets on Make My Trip, and then you go to an insurance website, then you search, or let's say instead of going for insurance website, most probably you will go to Google and search for travel insurance plans. You'll get 10, 30, 15 plans, right? I mean, and then you will start researching. Eventually you might just say that, okay, I don't really want to buy insurance right now, maybe the next time. So like here, this is where you can play and give such kind of embedded insurance where the customer can quickly make a decision without any need of filling in additional information, because he has already given that information for the primary sale which is happening on that particular website, app, or wherever. So this kind of like is helping or improving the sales process in these kind of distributions. Offline sales and online activations is another way of it. I think this has just started. I would say this is majorly being used in let's say European markets, majorly let's say home and renters insurance, where you just buy an home insurance, and then as and when you keep on purchasing products, you just open your mobile app, just take a click of the newly purchased photo, and activate it, and you get charged in the next month for it, right? So these kind of are the monthly plans where you can, the sale could potentially happen at a bank's end, where you are just buying your house. Eventually, when you end up buying assets in your house, you can keep on activating those assets and adding insurance to it. So this is one another way of distribution where people are innovating, right? And here the innovation is like identifying the product. Whenever you click the asset, the image processing basically identifies the asset, tries to map it with your existing data sets, tries to assign a value to it, and on the basis of that, charge premium to you. So instead of asking you to fill too much amount of data, or asking you too many invoices and other things, they just ask you to click a photograph, and you're done with it. The other thing is, which is standard, I think, if any one of you would have missed your car insurance renewal, you would have faced this, right? So where uh, let's say as soon as the car insurance expires, your case basically falls into a break-in category. That's what we call an insurance, where your insurance is lapsed and now you again want to reinsure your car. At that point of time, there is an inspection required. So initially, inspection was being done by physically an inspection person going to the user or the customer, then doing and physically inspecting the whole car, and then figuring out, okay, whether this is doable, and creating a report and sending it to the underwriter, then the underwriter approving it eventually. But today you have image processing, you have self inspection, which is being built, right? So more or less every insurance company has today a different ways of doing self inspection. Some are doing video inspections, where there is somebody else who is sitting in the back end and is taking decisions. And there are some people who are just asking for photos, identifying few small damages here and there, and for large, and if they don't find any, they auto approve these things. So your AI, ML, image processing, all these things are also coming into play, and reducing the TAT of such kind of insurance policies. So this is more improvement from a process perspective. And once your process becomes simpler, it becomes easier for your distribution channels also to sell it more, right? So this way your distribution can also improve, your processes improve, your manpower decreases, cost decreases, and it's more of a win-win situation for everyone. Customer gets to save on time, and instead of waiting, can get the insurance quickly in few minutes or hours, right? So coming back to knowing our customer, right? So like, I mean, today your customers interact when it comes to insurance company. There are multiple channels. There are bank insurance companies sells insurance to banks, through distributors, through your distributors, like partners, brokers, agencies. Now a same customer, think of this scenario where a same customer is coming to, oh, let's say an agency channel, where he purchases your insurance, and then the same customer comes to your website and purchases maybe another insurance, let's say travel, right? So it's the same customer, but you might not be able to identify that customer, that this is the same customer, and you might not know what the customer's preferences are, and what kind of experience the customer is looking for, let's say in terms of languages, or let's say in terms of let's say calls, what is happening, right? So those things are very important. And like, you try to reach out to this customer in automated voice calls, right? Because of COVID, what has happened is people don't really like getting calls, because you are already on so many virtual calls, and then somebody calls you, you just disconnect it. So, right, so when do you try to reach out this customer? Use of chatbots, use of automated calls is helping the customers, right? And for this to happen, you also build a customer 360 view, so that wherever the customer comes to you and touch bases with you, right, on different channels, you still are able to give him a similar experience, or identify that you are there, right? I mean, let's say you connect with my website, and then you connect with me on my with me as in my brand on WhatsApp, and the WhatsApp says, "Hey Ashwin, welcome back." That becomes like a very good experience, and you want to be associated with such kind of brands which really care for you, right? So these kind of things or experience and personalization is something that is being innovated on, and kind of like people are seeing good results from this. Sorry, I'll have to run a bit quickly. I'll just wrap this up with data-driven decisions. So this is again from a claims perspective, right? So in terms of claims, let's say identify, similar to pre-inspection, there you're just trying to identify whether the vehicle is damaged or not. Here people are trying to identify what the damage, what is the cost estimate of the damage based on the existing data, and then giving some sort of cost estimates where you think, okay, this is feasible and done with high accuracy. This is one of the parts where claim education is something that is being worked on, and people are trying to do image recognition, damage detection on this. And again, when you talk about image detection, it also helps you in fraud detection. Let's say same image is being used for claiming twice, or let's say another car's image is used in your claim for to file a fraudulent claim. So identification of such kind of damages, and using image I mean image recognition to identify whether two photos are identical vehicles, or they are identical photos, is something that is being worked on and is being put to test in some sections and some scenarios. Similarly, sentiment analysis to understand your customers' feedbacks and queries, and then making your product better and making your processes better wherever required. I'm running a bit short. I think I took too much time. I'll just last is more on product side. As I mentioned, like people are looking for pay-as-you-drive solutions. Like whenever pay-as-you-use, you just want to quickly go for a drive, or let's say you in monsoons you don't drive, so you don't really want to pay for insurance. So there are new products which are being worked on. Even the regulator has given approvals on such kind of things, where you can ask for pay as you drive. You can just purchase number of kilometers instead of purchasing a number of days policy. You can just go for number of kilometers policy, where let's say, okay, you're a 5,000 kilometer kind of person who drives 5,000 kilometers in a year. You go for that policy. You will have that policy at a different rate and different benefits, right? And health wise is something for people who are looking at get something from your health insurance, right? Who want to live a healthy life. So these customers get teleconsultations for free, and as a part of their policy. I'm not free per se, but as a part of their policy, and even other discounts and other let's say ambulance on call, or even let's say gym benefits. There are a lot of insurers who are supporting this, and this is kind of like, this is the next big thing, I think, from an health insurance perspective, which is coming on. I think that's all I had to say. Feel free to reach out to me if anybody has any questions. We can definitely. I would love to chat and answer those. Hello. Awesome.
Hi again, Ashwin.
Yeah.
Uh,
Sorry, I
sorry.
went over by 3 minutes.
Oh, that's okay. That's no problem. There was applause for you here. Just letting you know.
Thank you.
Fantastic. So we were waiting for our online viewers to have some sort of questions for you, but we don't have any. So we'll just
No
probably
problem.
skip that part.
Fair enough.
We'll also have a panel discussion. So, we'll have a complete discussion back then. So if you guys in attendance have any kind of questions for Ashwin, we can probably take it up towards the end of the show.
I like it, by the way. Since nobody has any questions, that means I did a wonderful job.
Yes, you did. Yes, you did. Yes, you did. You can take that credit. Well, anyway, Ashwin, thank you so much for that insightful talk. I'm sure we've had a lot to learn, and we'd love to have you towards the end of the event. We have the panel discussion as well,
Sure.
so I will surely see you again.
Yeah.
Meanwhile, we are also heading out for a quick break, so why don't you also grab a cup of coffee or something and join us virtually? Would love for you to be here, but maybe next time.
Yeah.
All right, Ashwin, thanks a lot.
Thank you. Thanks, everyone.
All right, folks. So that was Ashwin, and he was talking about how fintech today is impacting all other businesses, especially insurance tech. Uh, So yeah, we are at this stage where we are now going to take a 15 minutes break. I know you guys have been sitting and listening to people talk for a very long time, so it's time for some refreshments. We have tea, coffee, coke, biscuits, crackers, water, and everything else just out there waiting for you. So why don't you guys take a break? I've already got my refreshments, and I will see you all again in the same room in 15 minutes. So thank you very much. Enjoy yourself. I promise. Thank you. Very well. So moving on to the last speaker of the evening, I want to take this moment to introduce you guys to Jignen Pandya. He is the Vice President and Expert at Apple, and he's going to be talking about the impact of AI and ML in FinTech. So, oh, there he is. Hi, Jignen.
Yep. Hi, how are you,
Very good.
Digvijay?
Yes, yes, we can all hear you. Very good evening. How are you doing?
I'm fine, thank you for asking. How about yourself?
I'm great. I'm doing excellent. So Jignen here, folks, brings a lot of experience as the vice president of marketing and sales at Expert App Devs, and I think all of this experience and this talk about AI and ML and its impact on fintech comes from the various experiences and the various kind of work that the company has done and he has done with it. So Jignen, again, just like I told Ashwin, trust us. There are a lot of people here. The room is
Right.
almost full. So there are a lot of people who are very eager to listen to you. And of course, the stage is yours. Take it away. A big round of applause for him, please.
Thank you, guys. Thank you for that. Okay. So, good afternoon and good evening to all of you present there. I hope you had your nice tea and cokes and also coffees and snacks. Great. So, we'll be discussing about the future in the fintech and AI/ML, how it will be reshaped using artificial intelligence and machine learning. Okay. So, what exactly is fintech? So, basically, we can add two words. One's finance and the other one's technology. Okay, that how you can get the word fintech together. Now, if I ask you a question right now, that how many of you who are watching this live from your home or currently from the GeekyAnts office have a mobile phone with you, right? Probably everyone will have one, right? What was this ratio in 1990? Correct. Might be less than 1%. To be precise, it was 0.2%, right? So maybe few in thousands had a phone with them. And that also was not a smartphone, right? It was a bulky phone. They had to carry in briefcases and big coats to carry the phones. Now, if we talk about what changed in 3 decades and how this whole fintech has moved ahead, it's not a new concept actually. When we talk about fintech, you would be thinking in mind that it's more of blockchain, crypto, buy now, pay later, but that's not it, right? ATMs introduced in 1960 were also fintech. Debit cards and credit cards were also fintech, right? It all started from 1960, but what's the main thing and why it is getting so much hype right now is the simple reason of the investments that the fintech companies are getting, the seed fundings, the rounds, and lots of foreign investors taking interest. That is why it is taking up and building a lot of hype right now. So basically, it describes the business that how the financial technology and the segment that improves the delivery of financial services, right, through mobile payment solutions, big data, and financial management applications to enhance the customer's experience is what we can tell fintech in short, right? A small glimpse onto the right side of the screen, you can see the world map, where in 2021, you can see that there were a total of 10,000, 6,000, and 9,000 plus fintech startups in the United States, APAC, Europe, and the Middle Eastern regions, respectively, right? That's a lot of number in a year, correct? And just imagine the amount of investments they would have, got to, get their ball rollings, right? And the global fintech revenue is estimated to reach 188 billion euros by 2024. Okay, the major factors on which the fintech adaptation depends is the internet, penetration rate, the financial services, and the people who trust them when they are using it, and the access to the financial services via mobile phones, net banking, and all that. Now, what exactly is artificial intelligence, right? We all would have seen this scary kind of thing on the left side, right? In some sci-fi movies and all that. But when we talk about AI, it's one of the biggest, tech trends right now that is enabling the digital transformation. Basically, it is computer science that helps humans in understand the patterns, building deep root algorithms, and help machine act more like humans. Recently, if you would have read the news, right, in Russia a few days back, AI robot was playing chess with four children, and accidentally one of the children got hurt because the AI hand stabbed the hand of the child with the king's pawn, correct? Something like that. So it learns about your working while you're going through it. Okay, via deep learning and machine learnings are the two subsets of AI that includes the predictive analytics, training sets, and the patterns learning to learn to make machines act more like humans. Now, the fintech is being heavily impacted by the artificial intelligence. The reason is it is automating the routine task that leads to the productivity increasement and the enhanced outcomes of the ways of how the routine tasks are done. The overload of data can be overwhelmed. Decision making can be made easy by the use of artificial intelligence, by data mining and building insights, and to offer recommendations that helps with making decisions. Now, better security that helps build trust in the financial services is taken care by the cloud-based security services, and the predictive analytics that's helping the optimization of everything from the pricing to the interest rate that helps boost the business and increase customers, right? If you have a bad sibyl, the AI will calculate it accordingly and give you a higher rate of interest on your PL or your car loan or your housing loan. And on the other side, if you have a good sibyl about above 780, 790, 800, that will give you, respectively lower rates of interest rate and a good less investment down payment and more loan amount. So here are some of the real world applications that AI and ML in the fintech industry uses, which are chatbots that we have all used somehow while purchasing something from Amazon, Myntra, or using mobile applications of SBI or Axis Bank, right? Credit risk assessment that could be linked to CIBIL, churn predictions used for sales techniques, forecasting and market predictions, and also fraud detection in the fintech world. We'll read about this in the further slides. Okay, so exactly, the chatbot uses neural language processing to mimic the humans, to mimic the chatbot more like a human. This bots sound like actual human resources that are available 24/7, right? Even if you go at 2 a.m. in the morning and you chat on some chatbot, that try to give you responses just like a human, and at the end of the chat, it might ask you to drop an email if it's not help you further, right? But that's the end solution. Otherwise, it will keep you running on and running on via the same, choose from the below fields and all that. So it helps you to answer your queries via how customer have a queries about a product, support whenever there is a query regarding a product, right? Like Ashwin was talking about insurance, right? So chatbots are used on insurance sites as well, where they ask you to fill your details and then they give you some links to how from where you can automatically buy the insurance. Also, there are customers interactions when actual resources are unavailable at night generally. Okay, helps convert potential leads into customers by taking them through product overview and demo pages. Lots of service companies are using this because they are not available around the clock 24/7, so they use chatbots to make sure that their clients are leaving at least some sort of a contact form for them. So this is how chatbots are used in multiple ways in the fintech industry. If we talk about the credit risk assessment, it's also a very nerve-wracking area of financial services, because a simple human error can be a tedious process to again do the whole paperwork and everything. So a person with a bad credit getting loan is part of human error, right? It cannot happen with AI. So this is eventually led to a lot of losses in the financial segments. So, how exactly artificial intelligence can help here in credit risk assessment? So, you can train the machine, insert some logics to assess the documents and evaluations for good credits, right? As I said before as well, if you have a lower credit CIBIL report, it will give you, little loan amount and higher rates of interest. Also, it ensures people don't commit fraud when editing the documents, right? Because it directly, you have to give access to your KYC as well. Then only it's going to give you some output when you're filling it via AI. So it's not possible that they can commit a fraud there. Also, it helps you in streamlining and automating the whole process for increased productivity on the definitely on the product or the service end, right? When you know a person is likely to cancel the financial investment, it's talking. We are talking about here about the churn prediction, right? So AI helps you find and helps understand. This is more useful for a product company, right? That that at risk customers for your financial services after a year, which customers are not going to again resubscribe to your product or again not going to purchase your product. So in this way, the pain points of your existing customers are being taken care of. Ways to improve your customer retention can also be taken care via use of AI in churn prediction, right? So financial services can be unstable. However, there are always, there are chances and risk analysis to ensure that you invest in the right financial product. You can use AI, right? It helps you to identify potential gainers in the stock market. A good application, right? Coin is there. Then we are using money control. All these applications use AI a lot to make sure that you're getting good access to the scenarios of how exactly the market is revolving. It gives you a morning updates of how the Singapore index is taking care of and how the impacts on the Indian markets will be after 9:15 a.m. in the morning, right? It helps you in improving your predictive analytics with respect to the financial market, thus ensuring in good profits. It's not always that you will get a profit, right? At the end, market is always undependable. It's You cannot be 100% sure that today you're going to earn good amount of profits. Always invest when you have done your good research and you have given a good amount of time, right? So, an example of the credit card market where frauds occur the most, the machine will understand the difference between anomaly and regular transactions, right? So, it will help you to ensure that no credit card for fraud occurs, right? If we talk about the U.S. markets, there are lots of frauds going on, right? People use prepaid cards, and there are also things that you have read about fake checks being done, and people upload that checks to their mobile application they get paid for, and this kind of things happen, right? So this is all for the fraud market, that is frauds that are occurring, and this is how AI can help you, right? It will help you that no credit card frauds occur, right? This can also be extended to claims management where people falsify apply for insurance claim, right? Now, when we talk about the vulnerabilities, right? So cyber attacks can cause a major upheaval in the banking industry. Data security is one of the highest prominence here, right? A few months back, we heard about Paytm's data leak, right? 3.5 lakh crore customers' data was leaked. So things might have happen. We are not sure how exactly that happened, right? But managing the data securely can be a challenging task in this case. However, the artificial intelligence can help you improve your bank's data security, right? Most data breaches occur due to human error, which is also removed by AI because no human intervention is allowed over there, right? All happens over cloud. So no one has access to that. Basically, it's a third party thing which gets taken care by someone else, right? There will also be regularly analyzing of patterns where some abnormal anomalies are happening, and which can help you in data transfer, that where exactly the data fraud can occur. So, some of the top examples of the artificial intelligence in the fintech industry for chatbots can be the Bank of America, right? They implemented a chatbot named Erica, which has served more than 10 million customers till date. The bot was introduced in 2017 and was able to, help in 1 lakh variations in questions by 2019. So, more than 1 lakh variations of questions can be answered by that bot only. So I guess 1 lakh questions are enough, right, for any banking person who's coming with a query onto your application. Then we also talk about JP Morgan and Chase, also one of the well-known banks in the United States. So the company implemented artificial intelligence to detect fraud, right? They basically use to find issues with credit card transactions. The data is sent to data centers through which the application will know is the transactions are perfect or fraudulent, and that is how they would be able to process the claims, right? Because in the United States, if there's a credit card fraud, the person who is the credit, just for example, if that credit card is mine and I'm in the United States and I get I'm going and filing a claims report of just say $10,000 my credit card was charged for, I don't need to pay that, right? Because credit cards are made in such a way in the United States that you don't need to pay for any frauds that are occurred onto your card. We don't know if those frauds were committed by the same person or someone else did it, but that is how JP Morgan was able to eliminate the, not completely eliminate, but detect the frauds and then make it their due diligence and get the things done. Also, the Capital One Bank that developed an SMS based assistant for the bank's name Eno, right? So this could be some of the top examples. Now, what can be the pros and cons of artificial intelligence in fintech? If we talk about the pros, right, increased efficiency in budgeting and forecasting. We can help. We can use dashboards for that, right? The data can help create better insights that will help in decision making, credit risks, etc. So make sure that the data is accurate. Data is not being tampered by any human interference, or not some sort of mischief has been done with that data set to make it more look positive or negative. Assessing the risk and mitigating frauds will be easier, right? As we looked into the previous slide, how JP Morgan did that. We can also understand the market better with the data, thus producing products in syncs with the need, right? If you go for seed funding, you need to show them some good data, right? That how your product has been successful in the market. So it's not like you just do something with you give a handwritten note that, yeah, look, my product is working excellently well. You need some computer generated data sets which would be good enough to show, correct? There are also, it's not only that there are pros, there are also cons. So artificial intelligence cannot be the human, right? And they cannot understand the intuitions that through which a human can look at a certain way, and certain decisions may require the human intervention. Okay, so if we talk about the security procedures and protocols which are not completely established by artificial intelligence, because human intervention is needed there as well. So implementation of artificial intelligence needs to be defined and planned, else it would rather more doing the good, it will increase the risk on the fintech side. So it's better to do the due diligence and then only use any of the artificial intelligence in the fintech. Definitely, if it's a startup, right? So concerns are also there with implementation of fintech, of coming to implementation of artificial intelligence in fintech. So it could be bias, right? As we say, right, that people with good CIBIL scores will get good rates, and also that is what exactly it is, that the algorithms would be biased towards a certain segment from the starts. For instance, if a bank offers loans to credit card, a certain credit score, the algorithm will directly favor them. So the low income people would be not that much helped by that artificial intelligence. Also talking about the accountability, incorrect decisions made by the AI systems. So there's no accountability, right? Because there's no human to be blamed, right? So a human intervention is essential somewhere, and the for the AI to complete their algorithm and finish the work. Also talking about the transparency, you may not be able to identify what made the algorithm make the decision, right? In how exactly the algorithm is making the decision, correct? If we talk about in this way, then there are, if we talk about the search engine optimization, there are more than 200 plus factors due to which a search or a website has been ranked on Google, right? But no one in the world knows that, right? That which are those 200 factors. So that is how transparency can also be a part of that. Now, how expert app devs can help you with artificial intelligence in fintech? So we have strategic solutions that can improve the customer experiences. Also, we have perfectly tuned teams with right amount of experience and expertise. We have a team of business analysts who can help you with that. Apart from that, dedicated developers to turn your logic into well-coded solutions. You get designers that make artificial intelligence applications visually appealing, right? Smooth backend experiences, and also we help you with perfect choice of the technology stack. So in this way, we can help you out with that's expert app devs, all right? And we are coming to the end. So That is how it is presented. All right. So if you have any questions, you can definitely let me know. Also, we look forward to the panel discussion after this. And over to you, Digvijay.
Wow, this made me run. Hi, Jignen.
Hi. Yeah.
You can hear me, right? Great,
Yes. Yes,
fantastic.
I can hear you
Uh,
well.
Proxy applause for you from everybody else here. They did applaud, but
Thank you.
I'm sure you could not hear it. Uh, so we were also waiting for questions from oh hey uh, from the viewers online, but we didn't really get any questions at that time. So we'll probably
Mm-hmm.
just talk to you more about, and if anybody has questions here in the room, we'll talk to you more about in a while during the panel discussion.
Sure.
So Jignen, I'm going to see you again very soon in a couple of minutes,
All
and we
right.
will have a fruitful discussion on a lot of different things. So thank you very
And
much, Jignen, and I will see you again in just a few moments.
thank you.
All right, thank you. All right, folks. So this is the time where we now have the panel discussion. Obviously, that's Jignen was the final speaker of the day today, and we'll just take a moment, set the stage up for the panel discussion, and then I'd like to invite all of our panelists on stage. So just hang on tight. We'll be back here in just a few moments. Thank you very much. Oh, hey again. Hi. Uh, right. So it's time for the panel discussion. We are live as well. Hi, everybody online. So I'd like to quickly invite all of the speakers as my guests and the panelists. Obviously, Nikhil, would you mind joining us? Nikhil again, everybody. Ashwin is here. Hi, Ashwin. We cannot hear you again for some reason.
Sorry, I was on mute.
Great. Now you're here. Hi, Jignen. Welcome.
Hi.
Please have a
Yes,
seat,
thank you.
Nikhil. And I would also like to introduce the fourth panelist for here today. He is the VP of Strategy at GeekyAnts, Mr. Kunal. Please join us on stage. All right, Jignen Ashwin, this is Kunal. He handles everything that we do here at GeekyAnts from a strategy perspective. Uh, so now that we have met each other officially and virtually, I think a good point to start off the discussion by obviously we've heard from our speakers already. They've given their introductions and spoken to us about what their humble beginnings were, what they've been doing. But just to reiterate very quickly, if we could just have all of you guys tell us again, what exactly are you guys doing right now in the fintech industry, and just tell us about it. Kunal, why don't you go first?
Yeah, right. So we are the consulting company, as you guys know. GeekyAnts actually do a lot for the clients, and we take the ideas and we deliver it into the product. So fintech is some of the part which we have seen very gradually increased in the last 2 to 3 years. The way the different tech stacks has come into the picture, the client's expectation and the client the thoughts has completely changed, and the way they are innovating the ideas, our company is actually delivering those into the right solutions. So in this phase right now, so my role is actually mostly focused onto the client satisfaction. We deliver, like, we have the bunch of the devs, we have the bunch of the QAs, and the complete team itself deliver a solution to the clients. So that's my role here, and that's how our company is actually delivering for the fintech industry.
Fantastic. Thank you so much for that. Nikhil, obviously, you've told everybody about what the platform is, and multiple is obviously something that's really up and coming, and it's already made a name for itself. But where did this idea come from? I mean, what is your humble beginnings been in terms of that product?
Yeah, sure. Basically, we are here trying to disrupt the way we think about savings and investment. So, like I mentioned in my presentation, also, what we finally do with investments is that we use them for some consumption. It could be something like a retirement annuity after retirement. It could be a small short-term thing like a car, or a very short-term thing like a mobile phone also. But finally, the money that you receive is finally used for consumption. Right? So, but there are very few avenues present which will advise you or efficiently tell you where to invest the money. So the idea came across that a lot of investment applications and banks and a lot of advisors are present in the market. Someone like LIC has been present since decades, and all of us would have seen an LIC agent or interacted with some of them. And it has been how financial advice has been going around in India. But what we are trying to do here is that can you efficiently invest for each and every duration and on a goal-based basis, and finally linking it with your consumption. So this was something that was lacking. We are actually proud to be a globally first. So we are proud to be a globally first initiative to do this, and we think that we can take it internationally and global, and built in India. Because today nobody across the world, somebody is working in payment separately, somebody is working in investment separately, but nobody is trying to link the whole journey in a way that we are trying to envisage. And my personal role here is that I'm from the investment advisory team. We select the recommended mutual funds for you. We select the asset allocation for you, and basically help you achieve your goal from a financial perspective. We have other teams looking at brand partnerships and stuff, who help you in the final consumption. So that's how it is.
Right, right. It makes a lot of sense. Makes a lot of sense. Jignen, what has Expert App Devs been doing in fintech these days?
Sure. So if we talk about expert app devs, we are a service providing organization, right? We have in-house team of developers who have worked on projects for fintech, and we have developed somewhere around 15 to 18 plus applications around the globe and also here in India. Okay, it's not always that a complete development comes all together, but we get parts and parcels, and also sometimes from the inception stage, and also sometimes from in between. So that's how expert app devs has been, part of a journey of the fintech revolution in this decade, and how we have done some of the good applications. Due to the NDA show, I will not be able to share the names, but definitely, yeah.
Details,
Yes,
always.
we are in touch with Martin, so Martin knows about that. Yeah.
Yeah. Right, great. And finally, Ashwin, where is your enthusiasm for products taking you these days?
So, kind of like trying to create a customer app which can really help uh, engage customers at a much more deeper level. When you as soon as you hear insurance, right, thing that the only time that you can think of a customer will interact with you would be at the time of purchasing, at the time of renewal, and finally at the time of claim, right? So there is not much touch point where you can get in touch with the customer, maybe try to make him understand what kind of other products do you have, or let's say find out cross sell opportunities, what the customer might be interested in, and
Right.
share some insights. So major work is going on from an app perspective so that we can enhance the customer service experience, and eventually getting to a place where the customer starts getting pulled towards the app because we are providing, I think, much more apart from servicing their existing products. And maybe it becomes an avenue of other services which we offer, which the regulator has given approvals on in terms of value added services when it comes to health, pay as you drive solutions. I mean, as and when you need any kind of additional insurance, you can just come to the app and get it quickly, right? And from health perspective, yes, I mean, value added when you say value added services, it itself is a big I mean, product in itself, right? I mean, what kind of services that you will do, how they can be technology enabled, and then again national health stat coming in, how do you utilize those kind of services and then give a more enhanced and richer experience to the customer. So yes, majorly everything is revolving around customer experience and app. So I would say app is the product that I'm enthusiastic about right now.
As all of us are, as all of
Yeah.
us are. Great. So I think it's a very great starting point for our discussion today. I'd like to ask all of you folks, since you all are working into different aspects of fintech, but it's again very core fintech, right? And of course, Kunal, there's a lot of R&D that goes into helping clients solve their own problems sometimes, or when they're trying to solve certain problems in fintech in their own way. Uh, so, based on these research and development, and based on these insights that you all have gained, what are the current major disruptions in fintech that you see in the Indian market, and how do you think it's affecting the Indian market today? Kunal, why don't you begin?
I will take up into this one. Yeah, it's a very good question actually, because it will actually shape the next couple of years for the industry. Um, I have been talking to the clients, and the sentiments. What is exactly right now is actually mostly focused on the insurance sector, which is very good for Ashwin, right? Ashwin,
Yep.
right? And I can foresee few of the investment which will definitely come into the insurance sector. And the reason for that is, at this point, if you see the insurance sector completely, we have a very good set for the onboarding of the customer. We have a very good setup for the distribution of the insurance part. But if you see very closely, we don't have a very solid application or the solution for the claim aspect of the insurance, which is still open points where I foresee that we will definitely see a lot of the investment coming in to have real a kind of satisfaction for the client. Like for example, yesterday the car was completely like my car was here completely dead, and my insurance partner was Tata AIG, and
Ashwin.
I really have to find the number to call them, and it actually took me like a couple of calls to really have the right person. Even that was fine because that number was into the policy. But I really have no clue how the claim will work, right? Because we don't have the solution, and we have seen this because a lot of insurance, not only in the India. I have personally talked to Asia Pac insurance companies and as well, and we really feel that a lot of the investment will come into the claim sector of this insurance. This is the one part of it. The second part, the sentiments on the let's say the new banking aspect, right, where the lot of investment has happened, and if you see the recent regulations from the customer has little bit caution the sentiments of the startups, right? I personally feel that with the time, the way the startup and the governments are in the conversation, the regulation will be more logical, and that will actually help to introduce a better lineup for the startups. That is where I feel in the coming few months, something more good aspect will definitely come. And plus MSME segment, because we have not been able to talk on the MSME segment, which is a major chunk for the Indian economy. And if you see, from 2015 to 2020, we started with the UPI, which actually changed the way the MSME works. And then you see a lot of small innovation has come in terms of the application for the MSMEs. So what the stages has happened, like we first solved the problem of the payment, digital payment. We then have given a platform to them to really operate in the right way, right? And now we are having the solution for the easy loans, right? And that is where I really feel that in the future, some more tech will have the real influence.
Right, right. Makes a lot of sense. So basically, what you're trying to say here is that if you're talking about insurance, obviously, uh, you get it, you know what it's going to give to you and what you're going to get out of it. But when you actually go to claim that thing, this is some sort of cloudiness around it.
Right.
And this is not just an impact that the Indian market is facing, but it's spread
It's a
across
global.
multiple markets,
It is.
basically.
Right.
Right. What are your views on this?
Sure. So I agree on some points lately with Kunal that he had mentioned about specifically the MSME sector or the lending part that he talked about coming from perspective of neobanks as well. Uh, while I'm working in the wealth management industry and where we promote a non-credit or stay away from credit kind of thing, but credit does form a deep part of our lives. Sometime or the other, for an appreciating asset like home loan, it may make more sense to go for something like credit. So today, credit accessibility has become much easier. Earlier, a physical bank branch was needed to establish a trust in a remote area where you would have some credit. But today, with the access of mobile phones and internet, it has become very accessible to everybody. Obviously, the government also has a role to play with the accounts being open, bank accounts being open for everybody. But like Jignen had also mentioned in his presentation, decades back, ATM was also a disruption. So if we talk about fintech disruption today, I feel that the small process disruptions which don't catch our eye are something that is really making a big impact on the actual usability to the end user. There are obviously some innovations coming in which will have deeper impact, and maybe not all of them will succeed, but those who succeed will make it big. But the smaller process innovations, where you have an alternative credit scoring system, where you can assess a person's behavior based on, say, their mobile usage, their social network, their geotagging location, and such. Uh, that I think has the potential to have a very big impact on the overall system, as well as a lot of banks you're seeing legacy banks are upgrading their systems to much more being digital from a process perspective. So I think that is going to need a heavy level of innovation. Obviously, there will be some regulation coming around it, and RBI and other regulators which are involved will have some regulation. But I feel that this industry will have a long way to go from a process innovation perspective.
Right. So little things that make it easy for both institutions and customers in their processes and everything, but they don't necessarily come out, right? I mean, a customer goes to a bank and says that, hey, this process is really simple, but is unaware of what goes behind the scenes to make it simple, and these is little things that
Correct,
matter.
correct.
So you're saying that these disruptions will continue to happen, and these are the little things that are actually making a huge impact.
That's right. That's right.
Right.
Some of these things we have started to take a little bit for granted. Like maybe the newer generation is very used to QR or QR transfers, right?
Right.
But maybe 5 years back it was not that common.
Right. Maybe nobody have even thought of it.
Right.
Yeah.
But those simple things have transformed
Right.
transformed our lives actually.
Sure. Ashwin,
Yeah,
Tata AIG.
I know. I heard that. So,
Love to know your views.
I mean, I don't know what happened in your case, Kunal. Maybe I'll reach out to you separately to understand it. But yes, I mean, there's no denying it that sometimes, because of the volumes, it is always difficult to address each and every case in the first call itself. Sometimes you get into waiting. Sometimes maybe the customer is not able to find out. Um, let's say the phone numbers. So there, see, I mean, from an insurance perspective, when you look at it, I agree to what Kunal is saying. There is something interesting which might come up when it comes to claims, because see, I mean, at the end of the day, when you talk about this specific case, which is of motor, what is important is first notification of loss, right? I mean, everybody wants to be notified first as an insurance company. As soon as you get notified first, the chances of frauds happening, or let's say the customer reporting something wrong, are very difficult. As a layman, I mean, you don't really understand how to game the system, right? I mean, you are not into the system. But let's say if directly comes from the notification of loss comes from somewhere else, let's say at that point of time there are a few additional things which might come in. Not that every case is like that, but still there is chances of frauds happening, or because of that there are a lot many processes which are being stitched, right, to make sure that you don't really you identify these frauds and get whatever is right to the customer. So there are delays and things which are happening here, but if technically we are able to find these things properly, like I mentioned even before, right, what is happening is based on, let's say, the images which are uploaded, you can today do image recognition, identify whether this is the same image which was uploaded, let's say, a year back, and it's basically a claims fraud happening. These kind of things are being targeted and are being identified. So there are a few things which are still not real time, which everybody would like to be real time. Okay, as soon as such a, I have a claim, you take I mean, app, open the video, you just scan through 360, and boom, like your 10,000 rupees claim is approved. Right, so that is a bit difficult today. I mean, it's not that people are not working on it; everybody's working on it, but there is a case of accuracy, right? I mean, whether, like, see, me identifying that okay, this is not a damage as a damage, and then uh, taking this case to a physical inspection, which is fine. I mean, it is just a delay. But let's say if you have a damage and I say that that is not a damage and I decline your claim, that is bad, right? That is a bad customer experience, because customer will get pissed. Yes, so this is what is the problem. So I mean, these kind of things, and handling this is kind of a bit tricky. And I think technology is eventually enabling us to do that in multiple ways. It's just a matter of time. As and when we reach that accuracy, I think processes will start improving. I mean, and the experiences which Kunal had faced, such kind of experience will start dying down, hopefully, right? I
Right.
mean, so like, I mean, I think Jignen also mentioned about, right, bot calls, right? Today, voice bots. Voice bots are something which are being deployed from call center perspective, that at least you know what you need. Let's say there is a call going on with an executive for a claim. Maybe it is taking some time, but you are just calling up to get your policy PDF. So such kind of things, the bot can help you with those questions, get your email address, or at least tell you that okay, we are live on WhatsApp. Why don't policy number, and you have your policy copy within seconds. So there are multiple solutions which are there, and because of which the volumes will reduce. And eventually, obviously, everybody wants to get into tech. Who wants to run huge call centers and bear those kind of costs, right? So the direction is there. I think we are also catching up in terms of speed. It's just a matter of time. I think it becomes difficult, like at times, thinking outside the box. And what is kind of like innovations are always going to be there, but when you are a large organization, you also tend to think about how exactly this is going to impact my business, right? Innovation is something which sounds great. I mean, the output is also great, but may not be utilizable in your current processes and scheme of things, right? So those kind of things and challenges are there, which you always have to tackle around, and then obviously you have to keep innovating. So that's how I look at insurance and innovations coming in. There will be few things which will be there from an underwriting perspective also, like apart from claim servicing, because you want to create new products. So to create new products, you need to figure out new data sets. You need to work on those data sets and create new pricing models. So what kind of data sets would be using? What kind of pricing models are we going to use? Where exactly this data is going to come from? All these kind of things. I think there the innovation will start coming in. How do I identify what is the risk of Kunal, what is the risk of, let's say, Nikhil, Jignen, anyone, right? So these kind of identification of risk is also something that I think people will work on eventually. So like in fintech, when you talk about loans, you talk about secondary data, right? I mean, you talk about the primary data which the customer is giving, then you try to identify data from LinkedIn, Facebook, and any other channels, and try to give him a different kind of scoring mechanism, and give him a score. So similarly, from a health perspective, how do I identify that this person is a good customer? From a car perspective, until and unless we get into telematic solution where the company is going towards today, I identify how exactly the customer is driving, then only I can give him more discounts, right? Today there are no such kind of facilities, or let's say this is just under POCs, and it's getting deployed in limited audiences, and I think it's moving now because even the regulator has approved it, and it becomes easier to file such kind of products now. So that is where things are moving. I mean, it's a good place to be in. I mean, I went into it luckily 5 years back ago. I never thought that it would be interesting and I'll stick to it, but now I'm enjoying my journey with insurance.
Well, Jignen being somebody who's one of the people who is working tirelessly toward leading these innovations that you are talking about. Jignen, what are your views on this entire scenario that's been created?
Sure. So if we talk about customer centricity, right, that is also a big thing when we talk about digital disruption, right? That is not taken care right now. The customer is not at the center of everything. It's always the company that is on the fintech side tries to own everything, right? So a responsive regulation is very much needed there. Also, apart from that, a robust infrastructure is needed where end-to-end digitization should also happen, right? So there is a lack of IT infrastructure and end-to-end, digitization is leading to this challenges in the digital